Hey guys, it's Ken, CEO of MrKCalCredit. I'm back with you guys. It's a happy new year. We want to talk about two things today. We want to talk about credit unions and major banks and why you should choose one over the other. I'll give you guys a quick story of mine. I was at a major bank. I was banking with them for a couple of years. There came a time where I wanted a car loan. I applied an application inside the bank, and they actually denied me. And their reasons why was not very well explained. I didn't understand why. So someone told me to go to a credit union to get a better rate. I never even heard of a credit union. But I'm like, hey, what the heck? So I go into this bank. It's a credit union, local credit union. I immediately asked for a bank account because, for most credit unions, you need to have a bank account to get any of their products, right? So I opened up a bank account. That same day, I applied for a car loan, and guess what? I'm approved, all right? I was approved, and not only just approved, I was approved at a great rate, whereas opposed to if you go to a dealership, the rates that they were giving me at a dealership were about $500 a month. Credit union gave me about $375 a month. They already beat the dealerships $125. I was saving $125 a month, which goes annually over $1,000 I was saving, right? Just by using a credit union's product, all right? So let's go over the reasons why. The 5 reasons why I would tell you all to take your money out of your big bank and head over to a credit union, all right? So we're going to start with 5. 5 I have labeled corporate hierarchy. What do I mean by that? Corporate hierarchy, there's levels to the business, banking world, etc. At your major bank, Chase's, the Wells Fargo's, etc., you cannot change anything about their policies, their regulations, anything. But at a credit union, you actually can get hired as a board director. You can actually go and participate in meetings and actually apply as a board director and change policies within that credit union. A lot of people don't know that, but that's something big that maybe you might be interested in. Number 4, virtual. Credit unions are virtual as opposed to major banks. They're not virtual. A credit union, you can actually have a credit union online, and you can actually take that same credit card and get business done in practically any bank around you. If you have a Chase or a bank, a Wells Fargo credit card, you can only go to those specific banks, and there's only a limited amount of those banks in your area. So virtually, a credit union is a better option if you're like all over the place and you're not too particular and going to a specific direction. Affordable rates, like I just explained about the car loan, most of their products in between a credit union and the major bank's products, you'll find better offers with credit unions as far as payment plans, as far as the APR, especially the APR. If you're looking for a good APR, a good interest rate, which you should always do, you want to look into credit unions and compare it to your major bank, okay? All this is comparisons. You want to compare what a bank has to offer you in comparison to another bank, another credit union. All right, so number 2, relationship time. It's big because major banks really go off of how long you've been banking with them, the deposits you've been making, etc. Like they're serious on how long you've been beneficial to them in order to get the best products out of them with like no hassle. You have to have a long relationship with most of these banks, right? As opposed to a credit union, the day you actually apply for a bank account, you're actually a member of that credit union. The difference between you being a customer at a major bank and a credit union is a major bank, you're just a customer. At a credit union, you're actually a member of the organization. Shareholders own the major banks. Credit unions are owned by every single member. You own a percentage of the credit union. You're a part of like a family. So when you first get a bank account there, they're already considering you for the best products. Already. Number 1, we go with cooperation. If you need something specific, you tell them what you need at a credit union, they're more times than not going to help you out with that because, again, you're a member of their family. They want to give you whatever it is that you need. All right? So as opposed to a major bank. They're going to look at all types of stuff. They're going to ask you for pay stubs. They're going to ask you great history in their bank. They're going to might ask you for tax returns. And a credit union, 9 times out of 10, they don't ask you for this stuff, because once you become a member, the day you have a bank account, you're like family. Whatever you apply for, the only thing that they're really looking for is your credit history. And whatever you write down on an application and what you make, they're going to go by stated income. That's the difference between a credit union and a major bank, all right? So those are my top 5 reasons why you should always go towards credit unions over major banks. Major banks are mainly for the wealthy, high-class people who have established tax returns, established history with the banks. Credit unions are mainly for low-class and middle-class citizens like you and me. All right, we get the best products out of that. All right, so this is Ken with MrKCalCredit. I'm tuning out. Any of you guys need help with your credit, whether that's restoring it, taking negatives off, whether that's boosting it with positive trade lines, getting insight on how you can get high-limit credit cards, contact me. My email is MrKCalCredit@gmail.com. My cell number, you can reach me at 702-246-3502. Go to my website, kcalcredit.com. I have a subscribers list now. You can subscribe. Also, if you're watching this video for the first time, please click below, subscribe, tune in out. Have a good one.